Hey everybody, welcome to Mortgage Today for Thursday, March 14th, 2024, and oh, what a day it was. UMBS opened up down 20 basis points. S&P Futures were up 17.25, while the retail sales number came in a bit below forecast, and the revisions make last month even worse. The higher core PPI reading is more than offsetting the potentially bond-friendly implications. Yields were already slightly higher coming into the data and now are up a few more basis points on the open. So core month-over-month PPI, which is producer inflation, came in at 0.3 versus a 0.2 forecast that was 0.5 previously. Year-over-year PPI came in at 2 versus a 1.9 forecast and a 2.0 previously. Headline PPI month-over-month came in at 0.6 on a 0.3 forecast, which is a big beat. 0.3 previously. Retail sales, though, came in at 0.6 on a 0.8 forecast. It was negative 1.1 previously, so it was lower than forecast. However, a pretty big jump versus last time. So retail sales rose 0.6% in February, which is a touch below expectations on a year-over-year basis. Retail sales were up 1.5%. These numbers are not adjusted for inflation, so it is an indication that spending is on the weaker side. January numbers were revised downward, which is typical these days. Initial jobless claims fell to 209,000 last week. Biden is also proposing a $10,000 tax credit for first-time homebuyers and people who sell their starter home. The administration is also directing the FHFA to waive title insurance fees and telling the CFPB to go after fees at closing. Ultimately, the problem is supply and interest rates, so the going after closing costs and goosing demand probably isn't really going to do much. So apart from Tuesday, which was CPI day, today is the week's next biggest deal in terms of scheduled economic data. The trifecta includes jobless claims, PPI, and retail sales. Of these, retail sales has been the biggest market mover on average, but by a small margin in the recent months. Today's example missed the consensus, but not by much. It was also more than offset by an unfriendly results on the other two reports. Core PPI, like I said, fell to 0.3 from 0.5, but was higher than expected. Jobless claims didn't help, with continued claims moving well under the 1.9 million ceiling, with a big downward revision to last week's 1.906 million reading. It's now 1.794. With that, we find ourselves at the end of the CPI PPI week, with yields pushing towards a 4.3. Yet again, the world's biggest bond market sold off after another hot inflation report reinforced bets the Federal Reserve will be in no rush to cut rates, even as some areas of the economy show signs of sluggishness. Treasury yields rose as the data underscored the challenges that the Fed faces in achieving the last mile toward the inflation goal. Following the steps of consumer price data, the producer price index also signaled a pickup in cost pressures. Meantime, retail sales were softer than expected. While it's probably way too early to draw any conclusions, the set of figures raised some eyebrows about the specter of stagflation, which is ugly. UMBS ended the day down 33 basis points at 100.56. That 10-year closed out just below the 4.3 mark, but at that 100.56, that now puts us in this precarious range where we're below that red line, which is the 25-day moving average, but we are still staying above that Fibonacci line that was really tough to break through before. So we really need to make sure we stay above that, get back up into that range, so we have hope at running towards that 101,392 number. And there's also big news in the industry. The United Wholesale Mortgage announced it will cover the upfront cost of hard credit pulls for its partners. Last year, Rocket Pro TPO initiated a similar program. The rules for UWM's program are the same. The company says the credit report must be ordered within UWM's system, and UWM to pull and cover the cost of the upfront credit pull. And if the loan officer doesn't close, the cost will be covered. And if the loan doesn't close, the cost will be covered by UWM. However, if the loan does close, UWM will recoup the cost from the borrower on the closing disclosure. We also got a fun post from our sponsor at WellThatMakesSense.com. This is a continuation of the Yeah But series, where we have a lot of fun discussing the pros and cons of different topics. This week, electric cars were in our crosshairs. So, are electric cars here to save the world or just a nightmare waiting to happen? Pay attention and listen to both sides of that on our sponsor's website at, well, thatmakesense.com.